The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the podcast on Thursday, the 25th of March, 2021. On the podcast today, Vadim Alexandre, Head of Healthcare, talks about results from Cambridge Cognition, and also IXICO. They had an announcement recently that saw their share price drop by half, and it's quite a hot stock, you know. It's there's a lot going on there. I was very interested in watching it. So, we talk about that as well. Plus, also on the podcast, two lists for you: the top 5 most followed companies on Vox Markets in the last 24 hours, and the top 5 most read RNSs. You can check out both these lists at voxmarkets.co.uk, where you'll also see lots of other content. In fact, there's an article on Guild's Esports. Signs multi-million-pound sponsorship deal with Subway. It's a good one there. On Commune, premium raise there. Equals Group launches Fairfax B2C linked cards. There's also Blue Star Capital CEO Derek Liu discusses mobile gaming with portfolio company Leaf Mobile. Plus, as always, a bit of a sell-off today in the markets, but COVID-19 index, biggest riser, as if there's no sell-off today, is Fusion antibodies, up close to 14% at 165. And biggest faller, Gene Drive, down 28% on their results. I think that was down to 83 pence. You can check that out at voxmarkets.co.uk.
Vox Markets is an online community of investors that runs a free mobile and desktop platform that allows you to track news and updates about any UK-listed company, offering RNS push notifications, detailed charts, pricing data, and much more. Find out more at voxmarkets.co.uk/app.
And joining me on the podcast right now is Vadim Alexandre, Head of Healthcare at SP Angel. You all right, Vadim?
How are you doing, Justin?
I'm all right. Well, I don't want to keep mentioning it, but I'm not all right. I've got a tooth that's really hurting me, but it's coming out. It's leaving the body this afternoon. It's going to be yanked out by a dentist, so hopefully under some kind of painkiller, because that would be excruciating. But I'm all right. How are you anyway? I said you are cracking on. Have you had your vaccination yet?
No, not yet. No, still waiting. And unfortunately, I think we're caught out in this new, the new delays. God knows what. I don't even know when. So hopefully it won't take too long. But as you've heard, I'm sure in the press, there's trouble with manufacturing in India now, and then there's the EU battles. Well, the
EU saying we don't want AstraZeneca, it's no good for us, it doesn't work, and then now they're saying we want more AstraZeneca, we haven't got enough of it. So make up your mind. They're all over the place. Cool. Okay. Well, listen. We talked about Cambridge Cognition quite a bit. Cog, and they've had some news out. What's the news? Results of the year? Is it something?
Yeah, exactly. So full year results, the year ending December 2020. So that just came out yesterday.
Mm-hmm. Take us first of all. Explain for people who've not heard you talk about this before. Explain what Cambridge Cognition do, if you could, Vadim.
Yeah, so they help pharmaceutical companies. They sell services and software to pharmaceutical companies to help them do their clinical trials in the area of cognition. So these are trials on drugs that help in that space. So basically, like Alzheimer's disease, for example, you have to assess whether the drug is working, and there are all kinds of tools you can use to assess that. Cambridge Cognition offer those tools. So they help pharmaceutical companies with that assessment. So they're heavily involved in clinical trials in the pharmaceutical companies' clinical trials.
Yeah, marvelous stuff. And take us through some of the top line figures then. What's happening there?
Yeah, so basically, so this is a stock I think we've discussed several times. It's one of these small tiddlers that's just steadily doing better and has been doing well for the last year plus, actually, year and a quarter now. They've just been marching on. They've refocused about a year and a half ago. They really refocused on commercialization. Before that, they put a lot of emphasis on development, and then there was a bit of a miss on forecasts, and as a result, their stock crashed. And if you look at the chart, you'll see when that happened. It's so very clear. I think their stock went down to something like 20p from highs of 170, the year or 2 years before that. And now it's on a steady march in terms of recovery. It's been going up for the last year about from those lows. And that low, I'd say, was a real miss in the sense that it overshot, I think, because the business had never really gone lower than doing about 5 million sterling in revenues. But I think it's because they were forecasting 7 or something like that in that year. So it was a difficult period in terms of share price, but the underlying business was still there. So now this year they've done, well, this set of results that they've just issued, they've shown that their revenues are back to growth. So they're growing some 30% I think 34% per annum. And they're back to about 6.5, I think the number is 6.7 million in revenues. So you see this return to growth. Now that coincides with a real, focus on sales by the business. So it's not an accident. It's just a refocusing by the management team. They've done a great job, new management team since then, and that management team is just carrying this forward. So what I expect to see from this company is just slow. It's not slow. I mean, 34% is great growth, but obviously they can't maintain that high clip. But even, double-digit growth, sustained double-digit growth, hopefully for years to come. And with that in place, they've just, another important milestone they've just hit is they've moved into profitability in the fourth quarter of this past year. So in Q4 2020. Once that all starts coming through, profitability starts coming through, then operational gearing starts to come through. We should see. I'm hoping for. I own this stock. I love this stock because it's done well over the last few months, and it's on a steady pace upwards. And with these milestones being hit, provided they can just continue doing what they're doing, they have a new product as well that's in the process of being launched. A new service / product. And that's the kind of steady growth you want to see from these little companies, and grossly undervalued for a small company compared to peers in the market. All the other peers are, as we've seen healthcare go up substantially over the last year. Some of them, although they've gone up, relatively speaking, on 6-7 million in revenues, going on 8 next year, hopefully more. They should be kind of ahead of their peers who aren't making any money yet. So I think this one is a nice bet.
Yeah. And so what are they, about 27 million market cap? What are they? Is that right?
Yeah, that's right. 27 million market cap. The other thing is they have a record order book as well. So they can see about 6 million in revenues for this year. So they have visibility on 6 million this year. So, that underpins, then you have growth on top of that, right? So you have new orders, anything that you land on top of that. So the way their service provision is laid out is you have these contracts that run, sometimes multi-year contracts, right? So you can see you have an order book that's contractually agreed. So it's all about, executing on those contracts. So they have said that they can do 6 of their order book of, I think, 12.7. So it's a record order book as well. So they effectively you can see 12 to 13 million in orders that are contractually agreed over the next coming years, 6 of which are in this year 2021, and then you stack on new revenues on top of that in terms of your business development and sales effort, right? So if they've done 6.7 last year, we can already see 6 this year, and we're only 3 months into the year. There's room for that growth to be pretty visible. Yeah. I mean, it's a nice, steady, good business. Good margins, 39% margins. The other thing is, cash balances are growing. They now have, I think, just shy of 3 million in cash. So again, yet another reason. Nice, relatively speaking, safe bet. If something goes wrong, it'll be in their forecasts, like as in their. Some companies sometimes get carried away in forecasting. That's what I hope not to see here. But I don't think there's anything crazy in the forecasts. I don't know what the consensus is, but it's nothing, to my knowledge, that should be too out of the ordinary. And specifically because you see, as the company has said, you have good visibility on revenues. So, I mean, there are risks. So I'll name the risks. Another company, a peer, IXICO, is. I saw that.
He came off, fell off a cliff yesterday, didn't it?
Absolutely. And it's going to take some time to recover that. And that. These are the types of mistakes that businesses, mistakes. It's nothing the company did wrong. It's just that their revenue was overly concentrated. They kind of drifted into, worth talking about, because herein lies the risks of business. It's a similar business, completely different area, but similar business in terms of if you have over concentration of revenues to one client, and that's what happened to IXICO. If something happens to that one contract, then you have a problem. So in IXICO's case, what happened is, as they're a little bit of victims of their own success, one of their clients moved, they're similar. They're a service provider to pharmaceutical companies. And one of the drugs they were following was a Huntington's disease drug that was moving ahead in clinical trials. And as you move ahead in clinical trials, the contracts get bigger because the trials get bigger. So they went into phase 3 trials, but then the drug got pulled. So they lost that contract. And, as drugs, fail, that line of revenue stops for service providers as well. The contract research organizations, like the people who run the clinical trials, and the service providers to those people, like IXICO, like Cambridge Cognition. So what you want to see from Cambridge Cognition is non-over concentration of clients. So you don't want all of the revenues to be coming from one client. I don't think that is the case in this case, in Cambridge Cognition's case. It's only because you can kind of see the size of the contracts they're winning. They are winning bigger and bigger contracts, but they're still not, they never represent 30, 40, 50% of their revenues, to my knowledge, anyways. I think the largest contract they won was a £2 million contract.
God, that is when you look at that IXICO chart, that is a nightmare for holders when you have something like that, isn't it? Because it's been going very well. It's one of those things I sort of missed. I liked that they were on the podcast a while back. I liked them a lot. And but I thought they are quite pricey though. And they rose up, and I think this was back, I think start of 2020 on the podcast. But it kept going up and up, and it had a dip, and I see that in Feb. Sort of obviously everything else, the dash for cash. And I was thinking about that, but I thought they're not cheap, but they've risen to highs again. But 2 days ago, £1.10 down to 60 pence, which is that's about 50% drop in one day, which is a bit scary, isn't it?
Yeah, in IXICO's case, absolutely. I mean, they were quite frankly, they weren't cheap at 125 or whatever it is that they hit. They hit a peak of 125. And I own that stock as well, right? I picked it up. It was similar. It was kind of languishing around the 20p level, and then it started to finally break through and start. It's unfortunate this has happened to them, but it's not something that's just it isn't like a clinical trial failure for a drug developer, right? These businesses, like IXICO, I think has £7 million in cash. They have a very good specialist business. It is a good business. What's happened is effectively out of their control. It's the trial of the client failed. Do you see what I mean? Or they pulled the drug from the trials, right? So it's bound to happen, except that this happened to it happened to their biggest client. So in IXICO's case, it's truly unfortunate. It's that their biggest client, trial fell over. So that's these things happen. What I do see in IXICO's case is that they're highly specialized. So what's kind of, I think, the future of a lot of these CROs, specifically in like IXICO, like Cambridge Cognition, in the area of the central nervous system, so brain health, right, which is a really hot area. There's a lot of drugs in the pipeline because it's not really. There haven't been many successes in this space. Okay, so I guess that's a risk warning on the one hand, but it's a big area because there's still a lot of pharma companies chasing, Alzheimer's disease, Huntington's disease, other, areas of brain degeneration, right? So these are big sectors that need solutions. So the trials will keep coming, and therefore the service provision will keep coming to service providers like Cambridge Cognition and IXICO.
Yeah, so, interesting is that they say that maximum impact on revenues for IXICO would be 2.7 million for the remaining period of this year, and then 5 million from full year 2022. And the last set of final results, they had 9.5 million turnover.
Exactly.
So it's a big chunk, really, isn't it?
It's that second bit that's the big one. It's the 5 million. You know what I mean? That is painful. The 2 and something wipes out growth, I think, this year, pretty much. Which you can live with, but then they have to pedal hard to recover the forecast. They didn't have forecasts, I think, for 2022, but you can see that they're going to have to work hard to recover that, right? Recoup that. So I can't help but say in IXICO's case, there's going to be some flat, or slightly contracting growth for the next year or two, unless they line up another big contract, which they have done in the past. So they are able to win bigger and bigger contracts. They've demonstrated that. This is just, unfortunately, a pretty big blip in the road, if you see what I mean. Yeah,
well, do you know when they came on? I liked it, and I looked at the. In fact, do you know what's telling is that it's almost sometimes a bit of PR exercise. But I see the non-exec Mark Warren, has bought some shares in IXICO at 63 pence after the drop. That was when was that? Today, actually. It was registered today. But I always look at skin in the game. Always. I mean, it's not the be all end all. It's not for me a buy or sell on that, because if they got a cracking business, sometimes you don't expect sometimes a CEO to always have a big chunk. But I don't think they had a lot of skin in the game at all. And I thought, why didn't you? And I did say, why didn't you have skin in the game? And not many of them did, and I thought, well, that's odd. Obviously got options and stuff, but I was surprised they didn't have more skin in the game, because it seemed like a very hot company, And let me just try and find it. But there we are, shareholder information. Yeah, but I was quite surprised. 1% is the CEO's got 1% of it. I suppose it's good when it's like valued at 50 million, but when I was talking to them, they were down about 20 million, so it's not a lot. That's the biggest holding of a director is 1%. So
no, you always want to see more. I agree. It's always better that way. I mean, I agree with you.
But that drop though is quite tempting, because
well, that's it. That's the thing to consider. Like it probably was overvalued at twice that level. But now it's starting to come back into line with say like a longer term average growth rate. It had several spikes which maybe took it outside of the I don't think we talked about it too much on this podcast, because it really was a bit punchy. At above 100p, right? So. But yeah, no, it's something to consider, definitely. Like I said, I'm a long-term holder of this stock. I literally have held some shares for almost 5 or 6 years that have done nothing for me for a long time, but then they started to motor. I bought some more. I think that long-term it's a good business. And they can weather this storm because they have cash, and they are not hemorrhaging. You know what I mean? It's not a hemorrhaging business.
No, it's just one of the couple of contracts has dropped us all. But who knows? They may replace that. And they've also done things like, I remember seeing things like pop up with collaboration with Microsoft and all that stuff. So they've obviously got something excellent going on there. So that doesn't happen.
That is something. No, you're absolutely right. This is something that I think is overlooked in their whole story, is the whole data element and the AI element to all of this. Is there is some data companies, are worth billions. So, okay, we're not, it's a big leap to say that, and I'm not comparing them to strictly AI businesses or data, because this data is becoming more and more valuable to pharmaceutical companies, to other parties, right? There is a future in all of that as well. It's completely discounted in any valuation of this business today. So that's another, yet another reason or there should be value attributed to that, is what I mean.
Yeah. Marvellous stuff, right? There's two there, a nice area there. Cog, good results there, growing. I always like to see, when I'm looking for growth. What's one of the things you should always look for, and I all the time. And to me, a benchmark of 20% plus is always a good benchmark. If you're doing that, pretty much you're doubling every 5 years, pretty much. Yeah, so that's always very good. That So and in fact less than that, because it's compound. But yeah, above 20% in anything. And I always say to people, be wary if you see something like 150% growth, because it's normally from a low base. You can't really do that from a substantial base. But good growth in small caps is always what you're looking for. Always look for a bit of IP, maybe a bit of proprietary tech, stuff like that. But and in specialist areas. So I like both those companies there. But they're both on my watch list now. But I think at the moment I'm liking IXICO just because of that big drop. And before you never know, do you? Sometimes that's why you should always watch companies and have a bit of patience. Always. Yeah. Because sometimes the price comes to you, and not always, but it can do. And if it doesn't come to you, don't chase it, because there's other opportunities. Like I said, two good companies there. Take your pick, and wait for the price, and never chase it, because the price is what you pay. That determines your return, essentially. So you've got to get the right price. But yes,
I'm a big believer in that, Justin. Buy on the dips if you like a stock. Exactly. Watch the stock, get comfortable with the story, and then buy on the dips. I agree with you.
Marvellous stuff. Vadim, thanks for that, fella, and we'll speak you next weeky.
Thanks, Justin.
Okay, it's time for the top 5 most followed companies on Vox Markets in the last 24 hours. They are at 5. Which one is it? It is Supply Atme Capital, down 1.67% to 0.59. At 4, Argo Blockchain, down 12.28% to £2. in fact, Bitcoin is also rolling over a little bit. At 3, Guild Esports, up 2.73% to 5.6. At 2, Gene Drive, down 28% to 83 pence. And at 1, Advanced ADVT Limited, that's up 4.35% to £1.20. Okay, it's time for the top 5 most read RNSs. They are as follows. At 5, it's Boohoo Group, UK Supplier List and Sustainability Strategy. At 4, it is 4D Pharma Holdings and Company. At 3, Open Orphan COVID-19 Human Challenge Program Update. And at 2, 4D Pharma Holdings again. And at 1, Gin Drive Half-Year Report. That's it for the podcast. Thanks for listening. Muchos apreciados.
The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.